Okay, guys, welcome again to another trading journey. Um, Thank you for joining. Please do like the video, share the video for others to benefit from it, and also subscribe to the YouTube page. Um, Today we are going to be talking about market structure. So inside market structure, we're going to be talking about time frames. So I think this is the first part of market structure. Time frame, I think is the first part of market structure. To me, remember all I'm saying in this video is not to disapprove of what others have thought on YouTube, even on their personal mentorship page, not to disqualify what you've thought, not to disapprove of it, not to say negative things about it. I'm just saying my own view of the market. So just to make sure you you it is explained better to you, I'm going to be taking them step by step, breaking them step by step. Okay, so the time frame is what we look at now. Time frame is what we look at now. Now, we have different time frames, and each time frame has their unique. Each time frame has their unique analysis. Each time frame. So you have to know how to analyze each time frame. Basically, you have to know how to analyze each time frame. Now, this is the monthly time frame. Now, in the monthly time frame, you can see we are overall bullish. We are overall, sorry, bearish. We are overall bearish. Overall bearish because we took out this low, the downside, so we are overall bearish. We've only come back to retest the low. We might be going down also, but I don't know. I'm not the market. So you have to know how to analyze each time frame because they have their own unique way of analysis, right? They have their own unique way of analysis. Now, things might not be now on this particular time frame, from the monthly to the weekly and even to the daily, things are done on a bigger scale, on a higher scale, on a long run. So you think of things on a long run, you analyze on a long run, you, what I say again, you analyze on a long run. Anything you are doing right here, it's on a long run. Let's say, for instance, let's say, for instance, the market came, took out the low, took out this low, sorry. So we took out this low, took out this low. So we broke with a body candle to the downside. So when the market is coming back to retest, it retested the the low, which is this area, retested the low, retested the low. So if you want to trade, if you want to trade sell, if you want to trade sell, right, you should your take profit should be on a long run, your stop loss should be on a long run. That means if you are trading from the monthly time frame, the weekly and the daily, everything you do, you think should be on a long run, 3 months and above, 3 months and above. If you're trading bullish, or bearish, it should be 3 months and above. You should be analyzing for 3 months and above. So for the weekly, you can see that our point of interest, our point of interest on the weekly time frame should be, now you can see I have my period separator right here. I have my period separator right here. I have my period separator. So I don't know how many weeks are in this place, but our point of reference should be in this area, right? In this area, which is the beginning of the new week right here. So let me see how many weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Sorry. So no, I'm not 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 5, 6, 7, 8, 9, 10, 31, 32, 33, 34, 35, 36, 37, 38, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 52 weeks. 52 weeks. So why are we taking just this area and leaving this box, this time frame right here? Why are we taking this? So every low and high in this area are valid, are very valid, because they have not been tested. So every low and high are valid in this area, because when the market will get to that place, it will trigger. The market will trigger. You can see it will trigger. So this took out because it was a move that want to take out the highs. So this triggered, this also triggered, this high also triggered. So every high and low would trigger, right? So so you see that it is very important. Now you can also see that there is um a high right here, a low right here, very, very important low that started here. See, this move started this year. So this was the first candle in January. So it is very, very significant and very important. So that this was why the market came and tested. When it came to retest this did not move downwards. It went up. So also it will still come again to test again. So we are coming again to test again. So each time frame has its own uniqueness. Each time frame has its own uniqueness. So you should know how to analyze each time frame. So also in the daily, okay. So in the daily, we from this point, from this point, from 1, 2, 3, 4, 5, these 5 boxes are point of reference. So you mark out your highs and lows on the daily. You check for especially the area that has not been retested, the area that has not been retested. So those areas are areas of of interest. Those are your points of interest. Those highs and lows that have not been retested. Yes. So those are your points of interest on every time frame here, every time frame. So the lower the time frame, the higher the possibility of you finding a good entry to trade. So this is why we break it down to lower time frames. So you must learn, even if you are a swing trader, even if you hold your trade for a year, you must also learn how to break your analysis down The lower time frame, which is minute 15, minute 5, 3, and 1, you must learn how to break it down. You must learn how to break it down. Now, take note for those of you who do not know how the time frame works. So each candle, now this is the 1 minute time frame. So each candle form in 1 minute. Each candles, each candle form in 1 minute. Are you seeing this? Each of the candle form in 1 minute. Each of them, each of the candle. So in minute 5, the same thing. Minute 5 is also the same thing. Each of the candle, one of these candle, whether small or big, the form one would form in 5 minutes. One would form in 5 minutes. So five of this minute one candle is one of this minute 5 candle. So also in minute 15, each of the candle will form in 15 minutes, so on, and that's how it works. That's how it works in each time frame. Are you seeing what I'm showing you? So that is how it works in each time frame. So now take note of this. Every high and every low in every time frame matters a lot. Every high and every low in every time frame matters a lot. Even in minute one, every high and every low matters a lot. You have to know this. So when you come on the market each day, now why I'm using this MetaTrader 5 on my PC, because of this period separator. This period separator. Now on the trading view, you have to mark out the previous day, the previous day low or high by yourself. So, but in this period, in this Meta 5, I already set it for it to show me the period separator. So so this was yesterday's and this is today's move. So this was yesterday's and this is today's move. See, so every low and every high, they are very important. You only know, you only learn how to know the valid ones, the ones that are valid. So you only learn how to know the valid highs and lows. So I think that's for that in the time frames. I think that's for that in the time frame. So you must know this. You must keep this on your head. Every time frame has its own unique analysis. So we are not doing analysis, but every time frame has its own unique analysis. Every time frame. So I hope you get that. I hope you get that. I hope you get that. So thank you very much, please. So next we'll be talking about highs and lows. We'll be talking about highs and lows on the next on our next meeting. We'll be talking about highs and lows. So I'm just trying to take this step by step, so that it's gonna be understanding for everybody. We know the step to take so that we can be good at trading and we can know what to do at the right time. So thank you very much.